Yeah, good morning, everyone. Uh, Yesterday, US market came off mainly on account of some fear about rising bond yield. Bond yield has crossed all recent high of the near term and reaching near to 5%. Yeah, reaching bond yield are increasing, and that too because of some expenditure budget which is being placed in the House of US Parliament, and that is likely to increase deficit further, and that is creating some concern about the increasing debt of the US economy, and which has resulted into higher bond yield and creating some concerns for the overall equity market. Apart from that, the Asian market are also taking lead from the US market and are down today. And even the gift nifty is also trending lower. Apart from that, commodities are seeing some positiveness, wherein apart from oil, which is down by around $1.5, other commodities are showing positive sign. Iron ore and steel both are up by around 0.5%, and aluminum is also up by around 0.5%. Sorry. So, so overall, seems like more of a profit booking day for India as well. We may see some decline as well. Even credit growth figure, which has come yesterday for scheduled commercial bank, is not showing any sign of improvement. On the contrary, it has come down even below 10% also. The uh, fortnight ended 2nd May, the credit growth was 9.9% year on year. Uh, and in the last fortnight, it was 10.3%. So it is still trending down. So that is also creating some negativeness for the banking industry growth. So outlook seems more of a cautious today. We may see some profit booking today. Now I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. See, yesterday, after volatile session, Nifty managed to sustain the 24,800. But today is closely watched that immediate support of Nifty 24,740. If Nifty break closing basis and trading below this, then we expect further sell up towards 24,670, 24,600 at downside. Upside 24,900 is the first intraday resistance for index, and then 25,000 next important resistance zone for index. So we closely watch today's closing, but we open a negative note today. Start on the first half, you closely watched 24,740 below. Then we expect this pressure further increasing during the day. Bank Nifty also yesterday managed to sustain the important zone, that is 55,000. Bank Nifty again break 54,840 and trading below that range, then we expect further pressure to be towards 54,600, 54,300 at downside. Upside 55,440 is the first immediate resistance for Bank Nifty. The both index today we expect negative note open, and we see some range bound during the day. If both index break the important support zone, then we expect further sell off. In stock specific, Siemens looks positive. Siemens break March month high and closing above that important level. Do we expect this momentum to be continuing positive side in Siemens? The Siemens looks good at current level. Bharti Airtel also looks positive at current level. Do we expect some profit positive side? And we already given buy call in Bharti Airtel. Negative side, Pidilite industry looks weak, trading below the 200 TMA. Yesterday, last two trading session is closing below that important 200 TMA. So we expect this pressure to be continuing Pidilite also. JSW also showing a negative side. So we see some profit booking in JSW also. That's it for technical derivative I can carry.
Yeah, thank you, Vikas. On the derivative markets, see at this front, open interest has risen quite considerably in the last couple of trading sessions from 1.5 or to 1.8. That is a decent rise. So yeah, shorts have been built in. PCR OI is still in the negative. That also suggests some sort of negative pressure. And the VIX continues to remain high. So all in all, data is a bit negative, with 25,000 holding fort in the call front with the highest call built up around this area. We expect this to be a strong resistance on the upside. If that is crossed above, you'll see further buying coming in. Until then, you might see a bit of consolidation in between 24,500 to 24,800 odd levels. Yeah, so look out for the same. Uh, from the stock specific front, nothing as such, but metals are showing early signs of short covering action. Now, this short covering is generally happening in most of the metals, but PSU pack amongst them, NMDC, SAIL, and National Aluminium look solid, and they can witness some buying action in the next few trading sessions. So, yeah, look out for the same. That's it from my side. Like to ask the fundamental team to take over, please.
Thank you, Nirav. Good morning, everyone. On the result front, Colgate Palmolive India Limited posted the result marginally below expectations. This is mainly due to revenue degrowth of around 1.8%. That has led to absolute degrowth in the EBITDA. While EBITDA margin is reported at 34.1% versus 35.7% in the same quarter last year. The stock is trading at a PE of 46 times to FY26 earnings, and we will provide the outlook post today's con call. Mankind Pharma Limited posted the result below expectations, mainly in terms of operating margins. Top line has seen a growth of around 26% on a YY basis, and gross margins also improved for the quarter. However, operating margins were down at 22.2% versus 24.2% in the same quarter last year. This is mainly on account of higher other expenses. In the month of January FY26, the company has repaid the debt of rupees 3,000 crore. That has resulted in some contraction in the interest cost for the quarter. Further, higher other income has resulted into the higher PAT for the quarter. In the con call, the management has guided for the domestic revenue growth to outperform Indian pharma market by 1.2 times. Domestic revenue contributes around 87% of the FY25 revenue. EBITDA margin is guided in the range of 25 to 26% in FY26. And BSV segment is expected to grow in the range of 18 to 20%. The company is doing strategic partnership for the GLP-1 that would be expected to launch in the next year. The stock is trading at a PE of around 46 times to FY26 earnings, and we are neutral on the stock as we foresee limited upside from this valuation. Phynotex Chemicals had a con call yesterday. If we look at the results, revenue degrown by around 22% on a YY basis, while gross margins was slightly down at 36.2% versus 37.8% in the same quarter last year. Operating margins has seen a major decline at around 17.8% versus 25% in the same quarter last year. The major performance was impacted due to the FMCG segment that has seen the volume degrowth of 18% during the quarter. Deferment in orders continued during the quarter, mainly due to shift in the product portfolio. Also, higher pricing led to lower consumption in the last few quarters. The management is indicating pricing to normalize in line with the reduction in the crude prices. The textile specialty chemical segment has seen overall good performance during FY25 with 15% volume growth and 10% value growth. Along with the weak top line, it has seen the promotional rise in the promotional activities and spending on the brand building. Also, increased depreciation and higher employee expenses has led to margin contraction up to 17%. It expects commissioning of its greenfield project at Ambernath by September 25. The management remains positive on its investment in various areas such as oil and gas, water treatment, and the new product of AquaStrike. The Also, it expects demand recovery in the textile specialty from June onwards, and in FMCG recovery expected from the next month onwards. The management is guiding for similar performance of its last 5 years, with the EBITDA CAGR of 32% and the PAT CAGR of 50%. EBITDA margin is expected to be maintained in the range of 24 to 25%. The stock is currently trading at around 25 times to trailing 12 months EPS, and we are positive on the stock. Thank you.
Good morning, everyone. Protein e-governance technologies reported numbers which are muted. Revenues have come in flattish year on year. Margins were down 180 bips year on year at 8.1%. Stock is available at around 30 times 1 year forward earnings. Recently, the stock had corrected significantly. The company has missed getting shortlisted for the 1400 crore PAN 2 modernization project by the Income Tax Department. So while the company currently holds a mandate for processing and issuing PAN cards, which is independent of outcome of PAN to RFP, and is likely to have limited or minimal impact on existing PAN services revenues in the near term, as indicated by the management. However, we believe, while the impact may be limited in the near term, subsequent loss in revenues and market shares cannot be ruled out, and that could lead to further derating of the stock. So there is a con call scheduled today post the results. We'll update about the stock later tomorrow. Thank you.
Good morning. IndusInd Bank posted its results. Results were below expectations. Advances were stable sequentially, came at 1% year on year and declined by 6% quarter on quarter. PAT decline came at 2,329 crore versus expectation of 1,644 crore, declined by 199%. This was mainly on account of discrepancy and frauds detected over the past few months and higher slippages in microfinance business. Asset quality declined. Gross NPA came at 3.13% and net NPA came at 0.95%. Net interest margin came at 2.25%, impacted due to one-offs made during the quarter. Contingent provisions of 1,325 crore were utilized this quarter. Bank's vehicle loan book increased by 8% year on year and 2% sequentially, with disbursement rising by 3% year on year. All vehicle segments except tractors experienced stable and improved gross slippages. The MFI portfolio in Karnataka collection efficiency improved from 96.4% in February 25 to 98.2% in March 25. Progress towards normalcy in the MFI sector is expected in the second half of the year. Slippage ratio came at 5.81% against 2.41% quarter on quarter. Elevated slippages in the quarter are due to stress in earlier periods and corrections to specific loan account misclassifications made during this quarter. Balance in other assets and liabilities amount of rupees 760 crore has been wrongly classified as interest income rather than other income. The board suspects potential fraud involving certain employees who play a significant role in bank's accounting and financial reporting. Some reclassification completed by the bank are other income was reversed due to derivative related discrepancy. Revenue of 423 crore net of interim provisions and accrued interest was reversed due to an accounting error identified by an internal audit regarding their microfinance business. An increase in other assets and liabilities amounting of rupees 595 crore was recorded. This has no impact on bank's P&L. Review of groupings and classification in P&L result in transfer of 760 crore from interest income to other income and 150 crore from provisions and contingencies to operating expenses. Reclassification was performed during this quarter, and the management confirmed that the accounts have been thoroughly reviewed, starting their FY26 with the clean slate. Management is seeking a new leadership, and as they must submit candidates to RBI by June 2025. The MFI portfolio in Karnataka is showing improvement. However, the internal discrepancy are expected to delay full recovery of about 6 months. So we are negative for the stock. The stock is trading at 1 times trailing price to book value ratio. Thank you.
Good morning. National Aluminium Company posted the results. The result is above expectations. Revenue from operations have grown 13% quarter on quarter and 47% year on year. EBITDA came at 52.3% versus the expectations of 41.2%. Adjusted PAT was above expectations. The stock is trading at 3.9 trailing 12 months EV by EBITDA. We will provide the outlook after the con call today. Thank you.
Yeah, that's all from us. And I'll request the commodity team to take up from here. Nobody there from the commodity team. Thanks, and we'll close the call here. Thank you.